Kitco News, special coverage of the Decentral Miami Conference, is brought to you by Cook Finance, a revolution in DeFi asset management.
I'm here with Anthony Georgiades. He is the co-founder of Pastel Network. Welcome to the show, Anthony.
Thanks for having me.
Thank you for being here. Let's talk about Pastel Network first, and then we'll talk about the various sectors that you're involved with.
Yeah, absolutely. So you can think about Pastel as really, it's at its core a layer one blockchain that's been purpose-built. So it's an application-specific blockchain for the sole use case of NFTs. And how we've actually built this platform from the ground up has enabled us to really solve upon a lot of the persistent issues that you see in the broader NFT community and ecosystem. Anything ranging from high transaction fees, lack of proven on-chain storage, settlement issues, right? Network congestion, things of the nature. And so our blockchain itself has been purpose-built from the ground up for the sole use case of NFTs. Third-party applications and marketplaces can launch platforms directly on top of Pastel. Existing layer one blockchains or even NFT marketplaces and applications on other blockchains like Ethereum or Solana can actually use Pastel for our Sense, which is our near duplicate NFT detection protocol, as well as Cascade, which is our permanent loss-led storage system directly on Pastel.
Okay, so what are some of the most innovative developments in the DeFi space right now that maybe you like to explore more at Pastel?
Particularly as it pertains to NFTs?
Sure, let's start with that.
Yeah, absolutely. I mean, look, from what we're seeing, right, there's a lot of issues as it pertains to, both actual permanent storage over time. And people don't necessarily really think about that when they go out and acquire an NFT, right? But at the end of the day, what you're really acquiring is a specific smart contract standard that has really a link to where that file is being stored. And a lot of times that's actually stored on some sort of centralized server or database. And then in certain instances, you can also rely upon IPFS and Arweave. But a lot of these current solutions today aren't necessarily purpose-built for NFTs over the long haul. And what I mean by that is, we've seen a lot of issues recently in terms of data loss, somebody acquiring an NFT and that actual data link actually dying, right? 404 errors, things of the nature. IPFS is a really great solution in terms of actual peer-to-peer decentralized storage, yet there are certain inherent flaws that don't necessarily make it great for NFTs. So what we've done in terms of Cascade is we've actually built a novel storage system, a pay once, store forever model. You never have to worry about storage. You never have to worry about, is this link gonna die? Is this centralized server gonna go down, right? Do I have to actually maintain this link and pay this monthly fee? No. The way it works on Pastel is we use an encoding technique called RaptorQ, which is a fountain block algorithm to actually take the file, and you can think about it as we chop the file up into a bunch of blocks, and then we apply a redundancy factor to actually then copy those blocks, and then we leverage Kademlia to randomly distribute those chunks across every single supernode on the network.
Well, currently, just overview of NFTs. What are the major security concerns of owning and transacting on NFTs?
Yeah, I mean, there are certainly an inherent flaw of pure security issues, right? First and foremost, you don't necessarily always know, going back to what I mentioned, right, in terms of how that NFT is being stored. That's one very, very big issue. The other is this a duplicate? Is it a scam? Who's the actual author that created this NFT itself? We've seen NFTs that have launched on Ethereum. We've seen those same collections then go launch on other ecosystems like Solana, right? So if you try to assess a value of NFT as it pertains to the level of scarcity, right? In certain instances, these actual items aren't really taken into consideration. The fact that I'm actually acquiring something that is potentially existing on another platform or ecosystem as well. We've also seen, third-party enterprises trying to get involved in this space. DraftKings, for example, has come in and obviously has a number of high-profile partners, with intrinsic copyright in terms of ownership and authorship. Think high-profile athletes. We've seen a lot of those NFTs ripped off and resold on OpenSea and Rarible and whatnot.
So let's say I'm on OpenSea or Rarible, and I'm trying to pick an NFT. What do you look for when evaluating whether or not this is legit?
Right. I mean, there's a handful of things, right? At the end of the day, what's important to understand too is how the smart contract has been structured. A lot of instances, you're simply just deploying an Open Zeppelin, basic ERC 721 standard. But what's important to understand too is, has that smart contract been modified? Can it be modified? Can new pieces actually be put into existence? Or is this kind of a fixed supply over time, right? And so the actual ability for anyone to go and modify that smart contract, add new NFTs to the collection, increase the supply, modify where it's being hosted, certain backdoor vulnerabilities we've seen as well. So at the end of the day, I don't think the common user is actually really kind of contemplating a lot of these concerns from a technical perspective. The fact that, hey, they really are acquiring a piece of sophisticated code, and that code is, and sometimes, controlled by a third-party smart contract standard.
The NFT market is getting really hot now, and it seems counter to everything else that's happening in blockchain, in the sense that you've got more supply of things, yet the market overall, the valuations are going up. Why is that?
Right. Look, at the end of the day, everything, and if you look at just the broader asset market, just to talk about a little bit of the backdrop, we're going through what now? 24, 36 months of hyper printing. $3 trillion were printed last year alone. I think a lot of the monetary and fiscal policy, this supporting of low interest rate environments, has definitely made access to capital cheap, right? You've seen assets from anywhere ranging from private equities to public equities, real estate, commodities, right? Obviously crypto as well. And if you look at where NFTs sit on that curve, they're at the far, far right hand of that risk curve. So I do think that there's been a lot of money that's flown into the market, and I do think that's lent itself to potentially inflated pricing overall. Now, that's not to say I don't necessarily think that certain of these collections are going to have significant staying power over time, but I do think that right now we are in a very interesting, exuberant type of moment.
Okay, and exuberant type of moment, what does that mean? We're going to have a big crash in terms of prices?
I wouldn't necessarily say that, nor do I necessarily want to speculate in terms of which way things are actually going to go. But I would say, look, at any point in time, I do think that certain pullbacks can be healthy for the market overall. And I think getting back to the point of, hey, this isn't necessarily about launching a new collection in the metaverse, and I'm going to buy, this yacht for $750,000 in the metaverse, right? But getting back to the basics in terms of what's the core infrastructure that we actually need to build, what do we need to actually lay the foundation for, so that in 5, 10, 15, 20 years, this market's multiples of what it is today.
Cool. I was just talking to a hip hop artist who's making NFTs off of his bling. So, fun question for you, Anthony. If you had to make an NFT, what would it be?
If I had to make an NFT, in the form of a digital collectible or anything?
Anything. Go NFT something about your life.
I'd put my whole identity on the NFT itself.
Nice. How would that work?
So we've seen actually a lot of interesting and novel aspects in terms of what can become an NFT. And I think, just specifically speaking, one thing I'd like to say is I do think that anything that can be an NFT will become an NFT. If you think about immutable, stale data, right? So in the concept of real estate, you could actually put the deed of trust into an LLC, and that LLC is owned by an NFT itself. And you can trade that NFT freely.
Sorry, how does the LLC get owned by an NFT? Can you explain that?
Yeah, absolutely. So we actually saw this happen in Europe recently. The deed of trust was, the ownership of that was transferred to an LLC. The LLC's single member was this particular NFT itself. At the end of the day, a public-private key pair, right? And so anybody who acquires and owns that NFT has the residual claim to that actual LLC itself.
The legal aspects around NFTs are still a little bit in the gray area, right? The concept of ownership, the concept of copyright, is that being sorted out right now?
I would say this, it's definitely very, very much so gray in terms of where things are from a copyright perspective. But there are certain things that are very much so black and white. When I acquire an NFT, I'm not acquiring copyright unless it's actually intrinsically and explicitly outlined in the actual smart contract itself, or via some third-party contract. That copyright is maintained and owned by the underlying author or creator into perpetuity. In terms of actually what we're seeing in terms of taking real-world assets, a picture of Tiger Woods and making that an NFT, right? That is still, in a lot of instances, a particular gray zone. I think we're seeing platforms like Nike, right? They filed a lot of trademark applications recently to ensure that anything that they created in the metaverse pertaining to their digital goods was owned and maintained by Nike itself.
Final question. We're at a DeFi conference. If you had to fix one problem pertaining to DeFi from the technological side, what innovation would that be?
Oh, what innovation from a DeFi perspective?
Yeah.
I'd like to see a lot more sustainability in terms of actual yields themselves. And I think that that's one thing that a lot of businesses are looking to actually build upon. DeFi 2.0 is a great way that actually comes in and actually starts to mimic a lot of what we've seen in the Forex markets, for example. I think when we start to take some of those applications and apply that to the world of DeFi, bridge some of the things that have worked in the traditional world of finance for hundreds of years, I think we'll see a lot of what I would view as more predictability and a mitigation of some of the execution risks that are still associated with DeFi.
Cool. Excellent talking to you, Anthony. Learned a lot.
Absolutely.
Thank you for coming on the show, and thank you for watching Kitco News. Stay tuned for more.
Kitco News special coverage of the Decentral Miami Conference is brought to you by Cook Finance, a revolution in DeFi asset management.